Welcome to our presentation on closing journal entries. My name is Mary J. Collins and I will be your host. At the end of each accounting cycle, whether it be a fiscal period or a calendar year, all of the temporary accounts, i.e. revenues, expenses, and dividends, are closed, zeroed out, and the remaining balance is placed in the retained earnings account. This process will use an account titled Income Summary. The components and format of a general journal entry. You start with the date column and you put the month and day. Then there's the account title and description column, where you will have at least one debit and one credited account. The third line is a short description of the transaction. Debit means left, credit means right column. You will have at least one debit and one credit that match each other. In closing entries, on more than one occasion you will have multiple entries, so make sure your debits and credits match. Closing revenues to income summary. Amounts are taken from the ending balance of the ledger T account or the unadjusted trial balance. We start with centering the title closing entries in the account titles and description column. Then we put the date, which is 12/31. We will debit sales revenue for everything in the sales revenues account. In this case, $25,000. And we will credit income summary for the same amount, $25,000. Therefore, removing all the money out of that account. To close revenues is your description. The ledger account looks like this after it's been closed. Notice that it has a zero balance. Must have a zero balance after being closed. To close more than one revenue to income summary. Again, you'll be taking the amounts from either the ending balance of the ledger accounts, the T accounts, or the unadjusted trial balance. Start with centering closing entries, put the date in the date column, then you do service revenues and rent revenues, two separate revenues, and you do income summary for the full amount of both. And then the description is closing revenues. So let's look at T account for $25,000 would be debited, and then the rent revenue for $15,000 would be debited, and the total amount would be $26,500, and both counts will now have a zero balance. Alright, now we're going to move on to closing expenses to income summary. Amounts are taken from the ending balance of the ledger T account or the unadjusted trial balance. You will start with the date because this will be the second journal entry for your closing and you won't have to repeat the title closing entries. Now you will list all of your expenses in order of magnitude from highest to lowest, and then you will put all the amounts on the credit side. This is all the amounts in those accounts. And then you will debit income summary, and then you will add up all of the credits to equal the debit. And then the account title would be closing expenses for the description. As you notice, all of the expense accounts now have a zero balance. So you must credit each of these accounts for the full amount of its ending balance. Alright, closing balance and income summary to the retained earnings. When the balance is a credit in income summary, start with the date, and then income summary would be debited and retained earnings would be credited. Closing net income. Notice that the revenues were $25,000, the expenses were $20,000, and the net income was $5,000. So you would debit the income summary for the full amount and credit the retained earnings for the full amount, therefore zeroing out that account. Now, closing entries in income summary to retained earnings when the balance is a debit or a net loss. So it's the same date, 12/21. You're going to debit retained earnings this time and credit income summary. Closing the net loss. So again, let's look at the ledger account. In this case, the expenses were more than the revenues because you would have credited the revenues into income summary, debited the expenses into income summary. So you now have a net loss. You would debit retained earnings for the net loss and credit income summary. This would be then posted and the balance in income summary will be 0. Now, closing dividends to the retained earnings is our final journal entry for closing interest. You would put the date, 12/31. The account title is a debit to retained earnings, thereby reducing retained earnings by the amount of the dividends. You would credit the full amount in the dividends account. Closing dividends. It would look like this to the retained earnings. So you're going to debit retained earnings and credit dividends, therefore zeroing out the dividends account. Now, that ends our presentation on closing entries. This is a list of common account titles placed in categories. It's always helpful and it tells you which side increases and which side decreases the accounts. Examples of closing entries. This handout will give you examples of the journal entries we just went through, and then my website with more resources for CNM students. Make sure you have your username and password to access this website. Thank you for your interest, and I hope you take time to look at some of the other videos.